Hello, I'm your host, Effie Pilarino, and today I have the pleasure of having with me Ghela Boskovich, who has been a long time digital fintech friend. I connect her with fintech forever and ever. She's been around, and I'm excited today to talk about not only her Femtech Global Association, but her role at the, what's it called, the Financial Data and Technology Association. Do you usually use an abbreviation, Ghela, to refer to it?
FData.
FData. It sounds a bit,
I know, right?
yeah, it's a bit weird. And you've also been recently to the highly successful event in Riyadh that I hear, which I missed, and I hear was a huge success. And I want to pick your mind on that because I'm sure there was a lot in the atmosphere to absorb. And as you're focused on openness, I'm sure your antenna received different signals. So welcome. Thank you for being with us.
Thank you for having me, Effie. Looking forward to this.
Yeah, yeah. And there's discussion on social media about whether we should retire the term fintech because it's already at least 15 years old and it's becoming a bit of a cliche. So maybe we touch on that. But for now, we'll still use it. And we do have to give it some credit for blurring the lines between physical and digital in terms of financial services and blurring the lines as to where financial services are delivered. We no longer have to go to a bank branch, right? We have mobile only banks and banking services. And if I repeat one of my favorite what if statements from Ronit Goss's book, which is he says, what if payments become completely decoupled from banks? Fintech has laid the ground for that. And if that's the case, and we're blurring the lines as to we don't need to go to banks, we can do banking on mobile only, maybe we can do it on apps that have no licenses. I don't know, right? Or what's next? Where do you see these blurs? And I love talking about blurs going.
Well, I think fintech as a term is really nice nomenclature to identify sort of the vertical or the industry that we talk about, right? But financial technology has been around for millennia. The abacus was technology and it helped us count.
Yeah.
That to me is a financial technology. It may have been relevant 7,000 years ago, 5,000 years ago, 2,000 years ago, but it's still technology. So just because it happens to be related to finance, I think it's a nice starting point. Does it describe what fintech or finance is? No, but it's a place to frame the discussion. So I'm not particularly fussed about the term these days. What I see as interesting is, and where the lines start to blur, is where we look beyond financial data, not necessarily technology, because technology is ubiquitous. It's going to be applied encryption or AI or tabulation, robotic process automation, you know,
APIs,
guys, all of that. That's
DeFi, blockchain,
right.
any.
Doesn't matter what industry we happen to be in, we're going to use technology. It's the use of that and the outcome. And for finance, I think it's really about data. So data specific for the sector or for the industry, that becomes the material question: is what is the information that we're using to make decisions or to initiate actions or to do the thing that we want to do, whether it be pay for the corner shop milk or purchase a house or finance an entire venture. It has absolutely nothing to do with the technology necessarily. That's a means to an end. It's what does the intelligence and information that we have around the person, the event, the transaction actually allow us to understand around the risk so
Mm.
that we price it or construct the product or service differently to meet that particular set of circumstances. And for me, in context of open as well, it's about data sharing, and data sharing not just across the different verticals in financial services, be it pensions or insurance or savings or credit or payments. It has to do with what other intelligence sits right next to the thing that this transaction or this event is touching. That could be, for example, energy consumption and how you want to remodel your house or upgrade a building to be net zero and much more ESG friendly. It could be around actually purchasing a house, understanding the conveyance and surveys and the legal information that would allow for that home or that building to be exchanged between two parties. It's a financial transaction, yes, but it's materially attached to a thing. So, what about the thing do we need to know to understand the risk of transferring deed from one person to another? Or it could be about the supply chain and actually getting milk to your corner store and what that looks like for a small vendor or what that looks like for a supplier and the dairy farmer that's, 1,000 kilometers away and the milk is being shipped. Or if we're local, even, 20 kilometers away, but it's packaged, it's shipped, it now ends up on the kitchen table for the community. All of those things are touched by finance, but the intelligence around the event, the transaction, the product, the thing is much more interesting. And now we're starting to play in what we call open or smart data. And that to me is much more interesting. And that's where finance also needs to go. We talk a lot about embedded finance and having that financial event in the middle of the journey or in the middle of that experience. That's also, yes, it's a vector that it's a trajectory that we're absolutely on, but that's also informed by the intelligence and the data that sits around that event. And do you need financing as a small business to pay your payroll or to pay the insurance or to buy a fleet of cars if you're in the delivery services or to get a brand new coffee machine because
Yeah.
your espresso machine at the counter no longer works or you need double because you've doubled your rate of business and you need those little bits and pieces to make your business work. All of that is again affected by the intelligence around the thing that we're trying to do. So having more information, more insights that can be shared by the customer with the provider, be they a bank, they have to be licensed and accredited. They have to actually have a license to do, to deliver financial services. It's
Yeah.
important that we acknowledge the criticalness of regulation and having a regulatory framework for this. But it's about the customer being able to share that information in order to get a better outcome and to maximize the economic value of their money or to maximize the economic value of the experience, the thing, the transaction, the service. And that happens when you have additional insights. It's that same notion of actuarial tables in the insurance industry. When we started to look at Lloyd's of London putting together risk tables for financing trade, boats, ships,
Yeah.
crews, all of that,
Cargo. Yeah.
that you look at the actuarial information and the actual risk calculation, the more information we have about that, the more precise we can be on the pricing of the risk, the more precise we can be around the risk itself, and we can take measures to de-risk it. But we also accurately reflect what it costs to do something. And that's important when you're looking at individual behavior, individual access to credit, and having a high barrier to that when the risk profile is actually extraordinarily low. Looking at some of these artificial barriers to access for financial products and services that have been erected precisely because we don't have a full risk profile, because the use case or the circumstance is a blended thing. It's not just financial risk, it's behavioral, it's transportational, it's health related. It could be any number of different things, but it has multiple facets and multiple perspectives that inform the actual risk. If we're able to actually access information and intelligence around that, to price it better, to accurately reflect the risk, and to create products and services that, again, reduce the barrier to access for finance, we're in a better position. And how does that all relate to fintech as a term? I don't know, but we got there and here we are. This is the
You
thinking.
know,
It's
as I listen to you, and I'm thinking, of embedded finance and open banking, the use cases that have become, the classic examples, be it buy now, pay later, or, Lyft providing a banking app to their drivers, all sorts of these examples. But what I'm hearing from you, and I'm rather questioning, is that this require the financial services providers to open up and think of, of the goal of, wait a minute, I don't want to have only a touch point with the customer when they're ready to make their transaction. I want to accompany them along the journey to make a decision, be it a house, be it an investment, be whatever it is, and have them through the journey. And that, I assume, would require creating a partner ecosystem, because the financial services provider can't do that and shouldn't be doing all that alone. But it's really about transforming to an ecosystem through APIs. Is it more like becoming an Amazon, which is a complex ecosystem, not, it's like a conglomerate, but with APIs that are, everything works internally with APIs and across the different parts of the ecosystem. Is that where we're going? Because we don't have an example like that, right?
We don't necessarily in Europe, but I can see where we actually have some of that in Asia, and I'll get to that in a second. The notion of a single institution having every single touch point they need with the customer during every single transaction is a pipe dream. It's also irrationally
Yeah.
unreal. And nor would you want to. But what you want to be able to do is be the trusted entity that no matter what happens, that customer sticks with you and continues to expand the number of products they have with you because you're facilitating an easy life. You're reducing the friction for their financial lives. And that does require partnerships. And the interesting thing about that is, how do you actually partner with a smaller fintech or another organization? It is about the data exchange. It fundamentally comes down to, how do you share that information? And if you're looking at how to do that today in a safe, secure, measured way, it's looking at APIs and having interoperable standards, both for the tech stack, the API itself, and for the data that's being exchanged. So it is about interoperability from a technical perspective. And right now, that is API first. And we've seen a number of regulators across the globe lean into this, understanding that this is the way that they can manage, enforce, and supervise the appropriate data sharing approach, whatever the regulatory framework has to be. But also from a technical perspective, that's how you start to consume your own data internally. How do you reduce silos? How do you open up core systems that sit on a bunch of information, but you can't actually extract it or port it or make it easily accessible or searchable with traditional, I'd say, yeah, traditional approaches to building your technical infrastructure. Today it's APIs. So yes, if we're going to be looking at a consortium approach or a conglomerate approach or a partnership ecosystem, the only way you can do safe, secure data exchange is via API. And that seems to be not just the common wisdom, but the accepted truth. So when we're talking about data sharing economies, or when we're talking about building those things, that's one of the keystones. Interoperability from a technical perspective and from a data perspective. But we also have three other keystones that are critical. One is digital verification, or a form of digital ID. The other is an explicit consumer data right, so that the genesis, the entity, the person that created all of that information is able to share it at their discretion, at their choice. They can direct the financial data, or they could direct the data be it energy consumption, health, transportation, retail. They can direct that information to a regulated, accredited, licensed third-party provider that sits within a trust framework so that we know the actors are valid and good, and mitigating the risk of bad actors in the network or the chain. But that explicit consumer data right is another keystone. And then the fourth is consent and permission management, being able to grant consent, revoke consent, grant permission, revoke it, and understand exactly what that information is to be used for, how it will be used, and if it's shared, and how that sharing actually would allow for that service or that event or that transaction to happen. Those are the four things. But going back to your original point, how do you do it? Via APIs. And it's really critical that that's a blend of industry cooperation to arrive at the technical standards, but that those standards are also monitored in a way that those that are part of that network or part of that ecosystem actually have an API that performs and is high performing, and again, also conforms to the standard. Because without it, the entire network breaks.
Yeah,
It
yeah.
is a matter of making sure conformance and performance to a technical standard is again something that is part of that hygiene, and that those institutions actually lean into building a high performing and high conforming API, because they're also, it's not just about sharing the data, it's about consuming the data. So you want to have a mechanism that allows you to do both, because you have advantage, not just sharing it, which fosters better consumer outcomes if you can't deliver a product or service, but are using a partner. But also when you're trying to get a better view of the customer and they want to share outside information, you need to be able to consume that and do it in a way that, again, is safe, secure, and interoperable.
Mm.
So APIs, yes. And until we find a better way of data sharing, that's the
Yeah,
way
yeah.
it
Even
will.
though they're not as sexy as generative AI, APIs are key, right? I mean, I was last week here in Zurich at an event organized by the Open Wealth Association, which is a nonprofit industry association, and their goal is really, because there's no regulation here in Switzerland, they're around open finance, if you want. So they're trying to work together to develop standardized APIs. And they have started with an API around custody, right?
Mm.
This is a big issue in wealth management, right? Very common to have multi-custodial accounts, and having an API to share the custody providers that is standardized and accepted. They're working on APIs around customer onboarding. And you would think that we would be there already, but we are not. I mean, it seems, I guess wealth is very much behind payments and other APIs, right?
There
And
are, yes, and it's interesting because different markets have different regulatory frameworks around this, right? And some are hybrid. Looking at Singapore, for example, it's, the regulator owns the tech stack, but there's every incentive for the industry to be working with the regulator, but working as an ecosystem to do data
yeah,
sharing. In Europe, it's very much a regulatory driven approach. The US finally getting its regulatory framework in place, but US and Canada have been market led in terms of data sharing.
yeah.
And we see the asymmetries across different jurisdictions. But what we can definitely predict is finance is not the only industry that is being encouraged either by the market or by regulators to open up the tech stack and encourage data sharing, but that there are different verticals within financial services that are much less prepared for that and have a longer journey. Investment and wealth definitely being one of them. And that can be in part because and I'm thinking specifically on the investment side, A lot of those portfolios are not digitized yet. So a lot of that information hasn't gone through the digital transformation work
Yeah.
that is needed to do this. And so some are well behind and some are much more progressive. But the inevitability of data sharing has, I think, been accepted precisely because finance isn't the only industry that is being required to do this, nor are they the only industry that finds market incentive to do this as well. So we're seeing aviation, we're seeing transportation, retail, health, and energy. My goodness, energy and communication
Yeah.
are
Yeah.
huge, right? And they're being opened up as well. So for any vertical within financial services to think that they have another 20 to 50 years of sitting on their own data, no, they'll be left behind. And there's every advantage to being one of the first movers or an early adopter of a digital transformation in a meaningful way, but B, understanding how APIs can rationalize your tech stack, but also make it much easier for you to share and consume external data, and that you have every reason to get there as quickly as possible.
I mean, when I think about wealth, even the communication between asset managers that are basically selling products, their funds with wealth managers, it's the old way, PDFs and papers.
And what a monumental waste of time, especially when you're looking at market fluctuations and a day or a week or a month could
Exactly.
mean extraordinary loss or gain.
Yeah. Yeah.
And the fact that trading floors operate on real time, but the actual transfer of those assets don't,
Yeah.
is something I don't understand. I can't square that circle. The fact of the matter is, time is the thing that is of most value. And we're not pricing time in a meaningful way in asset management. And nor are we on the investment side. You can execute a trade, but you can't necessarily swap an asset.
Settle. You're not settling and clearing. And this is really, obviously Bitcoin and cryptocurrencies have brought this point right in our face.
Highlight it. Yeah, it's time. Everything is about time optimization. That's the one thing that a lot of the industry has not yet made itself ready
Yeah.
to address is that we're
Ghela,
actually.
also, we've seen the last couple of years the rise of other verticals that touch on fintech but are not 100% fintech. For example, agri-tech and climate tech, prop tech, and so on. And it seems to me that the world that you're describing that we're moving towards will sort of blur completely the lines of all these sub-verticals, right? Because, when we
Fascinating.
say, right, agri-tech, what is it about? It's about using technology to gather more data, more precise data or alternative data, then build stacks to sort of analyze that data and then offer them through APIs, hopefully to financial services that are needed to either finance activities in agriculture or in the supply chain and so on. So it seems to me this interconnectedness theme is going to be part of our life going forwards, and technology is just enabling that. But it's a mindset shift.
That's absolutely it, Effie. There's intersectional data, right? Everything intersects with one another. Nothing exists in a silo, except for internal data sets across financial services. Those are still siloed. But we don't operate in a vacuum. And again, it goes back to what am I trying to do that has a financial component? It's not pure finance. It's always in relation to something else, be it financing a crop or getting the crop to market or getting corn from one wheat from the Ukraine to Europe or to Africa or to Asia. There's always something associated with it that isn't purely finance. So how do we start to understand that it's about data flow and data consumption and data information? It's not necessarily about the technology. Technology facilitates an outcome, but the outcomes are varied and multifaceted and more complex than just pure finance. So, yes, it is recognizing that the intersectionality of information and intelligence actually makes the world go round. Technology is just a Machiavellian way of getting there. And that the technological approach may evolve incrementally, but it's the thinking about the business model that actually is extraordinary, exponentially crazy in terms of the thinking that will shift daily, and that may shift moment to moment. So, how do you start to understand that it's not tech, fintech, prop tech, ag tech, sub tech, whatever it happens to be? It's business model looking at different insights that allow us to do this thing. And the moment you step back from it being a technical question and more of a business model and intelligence question, then you can start to see how you better construct your tech stack in order to consume that intelligence and information, and how you can start to restructure your product catalog in order to meet the need. And then also look at your partnership approach and your strategy, because you'll want to be working with firms of all sorts of sizes that do something very specific in the value chain, do it extraordinarily well, and allow you to start thinking differently about business models and enable that business model evolution rather than just a pure technical play.
Mhm. Do you think, Ghela, you swim, you're diving every day into this ocean of data and how the economy will be changed by this openness and intelligent sharing, I guess, of data? Do you think that the current brokers of data, and there are a lot of brokers of data, some of them, um, I wouldn't say that they operate in the gray zone, but they're not recognized. It's not well known. They're not so exposed that their business is about selling data. Will that be disintermediated? What do
Oh,
you?
this is controversial, but I hope it is. Because what we need to establish is who actually owns the data versus who's transacting that data.
Trafficking. It's like
Traffic.
trafficking, right?
Trafficking. Perfect word for it, Effie. Perfect. That's exactly what it is. So, how do you get back to an ethical data sharing approach, right? When you've got brokers that are doing data trafficking, it's a consumer data right. And we're starting to see that become a much more tangible thing in the legislation that's being pushed that enables open data sharing or open banking or open finance or smart data. And that does change the nature of the game. How it will impact the broker sphere, I can't predict. But what I can say is that there'll be much more scrutiny. There'll be a lot more discussion of what ethical data sharing looks like and what consent management actually looks like for the individual. Because when we can track and audit the sharing of that information, where it ends up, who's using it for what purpose, we can start to identify bad actors. There will be brokers that have an ethical structure. They're willing to, give you that onward sharing of data sort of chain, and that they work within the consent frameworks that currently apply. And there are others that don't. And this is interesting because banks data, not just customer data, but banks data is also being brokered. So financial institutions have every reason to want a consent and permission framework that allows them to also understand how their intelligence and insight is being trafficked. Because once it's out there,
Yeah.
you can't put it back in a toothpaste
Yeah,
tube.
yeah, yeah. I don't know who's selling it and reselling it,
Exactly.
and is there any revenue share by if you're adding some value on top of it or not?
And that's the other thing is it starts to call into question the revenue and profitability model of data brokering. And how do you assign who is owed what? So I think as we start to explore open data as a principle, we will definitely run into this data trafficking question. And that will fundamentally change the way data is exchanged, especially when we have an understanding of the explicit right of the consumer or the genesis of the data, owning it,
Yeah.
and being directed at their discretion, but also when consent and permission evolves enough to actually give real intelligence around what the data is being used for, where it's going, who has access to it, and being able to turn that on and off at the consumer's discretion or at the owner's discretion, not the broker's discretion. So, from an ethical perspective, I hope that we get to that particular disintermediation in a meaningful way that still allows for data exchange to make money, because
Yeah.
money's not a dirty word, revenue's not a dirty word, but in a way that actually acknowledges the proper ownership of the data.
Yeah. I mean, we could talk on these topics. This specific topic is really exciting and very interesting to see what happens as we see more adoption of open data practices and new business models, hopefully that are ethical. Ghela, before we close, I want to hear from you a bit about what you're working on with the Femtech.
It's taken a bit of a back seat. Most of my efforts these days have been on open banking and open finance and the data sharing. But I think what's been really encouraging is that there are other organizations that have taken the lead on this, and it's become much more part of the zeitgeist. The fact that we're talking about equality and equity and the value of having a team that represents the market you serve, that we're not just serving one facet or one particular profile, that we're not thinking in the stereotypical 19th, early 20th century mindsets, that we're looking at all of the value that can be contributed when we also open up our own understanding of what people are and look at the people level, not the attribute or the color or the makeup or the construction or the geography of the person. So in an odd sort of way, for me, it's that this notion of open data is also a reflection of how we start to think about the contributing components of the teams that we make, how we see other people, that we open ourselves up. And I'm hoping that I can let others champion that, because I'm not a diversity, equity, and inclusion expert, but I'm an advocate. What I am an expert in is opening up things. And I think that was the early journey, is getting people to pay attention to that through femtech. And also the play on words, right? It's a little limiting. It's not just about gender. It's much, much broader than that. But that my work in the open space is reflective of where I'd like to see all of society shift to, that we're much more open and curious and interested and accepting of the vast differences that we all represent and celebrate.
And on that note, I hope that finance culture in finance and the next generation of fintechs that come along, when they grow up, I hope they have that type of business culture, because the current ones, I feel mostly, once they grew up, they have not shown any signs of different business culture. They might have, different ways of delivering products, and maybe they've commoditized several products, and maybe they've offered more access, definitely easier access. In some cases, it's good. In some cases, it isn't, but they haven't changed the actual business culture within the organizations. Do you agree?
Yes, and I suspect it's because there is a rigidity to late stage capitalist models that this reward a particular type of business culture. And that until we can break a bit of that late stage capitalist mindset, we're going to be stuck with rinse and repeat exploitative business models, and specifically cultural models that again reward certain types of
Persist,
behavior and certain types of
persist.
things.
Yeah.
Yeah, I'm Effie. I mean, I don't often say it publicly, but I, to a certain extent, would love to see a lot of this stuff burnt down. not knowing what the answer is to replace it, but hoping that this swing that we have towards extremist positions and rewarding late stage capitalism exploitation moderates in the next 20, 30, 40 years. I'd like to leave this world seeing progress not being clawed back because we've slipped, but actually being made and being built on in a way that respects the human experience.
Yeah. And on that note, I have to thank you. Thank you so much for being with us in this wonderful conversation.
Thank you, Effie. It's been a pleasure, and I'm really glad you reached out. Thank you so much.